Welcome to another adjusting entry video, and this one is unearned revenues. Maybe you've already watched the video on accrued revenues. Well, unearned revenues are just the opposite. As you recall, accrued revenues is where we've earned the revenue but we haven't received the cash yet. Well, unearned revenue is just the opposite. We've received the cash but we haven't earned the revenue yet. Okay, so you see how it's just the opposite. Of course, in running a business, we'd love to have all kinds of unearned revenue because that means our customers have already paid us, right? We'd like to be paid up front rather than having to wait. The norm is more having to provide the service and then receive payment. But in certain industries will have quite a bit of unearned revenue. So again, unearned revenues is we've received the cash, but we haven't provided the goods or services yet. So you see the definition here on the screen: cash received in advance of providing products or services. Some of the examples: magazine subscription companies. It used to be you had to pay for your magazines in advance. Now it seems like if I don't subscribe to something, they keep sending me the magazines over and over. But that's how it kind of used to be. Kansas City Chiefs season ticket sales. Anybody a Chiefs season ticket holder? If you are, you know very well that you have to pay up front, don't you? You pay up front before you've even watched one game. Some would argue that even once you pay up front and then you watch the games, you still don't get much service. I guess you get some entertainment, don't you? And then, of course, there's Metropolitan Community College. You have to pay for your tuition up front, don't you? And then you get the education. So Metropolitan Community Colleges has a considerable amount of unearned revenue, particularly at the start of the semester. Let's set up an example, and let's go back to our old trusty Kid Company. It says on May 1st, 2010, Kid Company received $10,000 in advance of providing services. Okay. First off, what journal entry would Kid Company make on May 1st? Now, this is not the adjusting entry. Okay? I'm just setting up the problem here. Well, on May 1st, 2010, wouldn't Kid Company debit cash because they received the cash up front, but they haven't done anything yet. So they're going to debit cash. And do you know what they would credit? Think of what kind of an account should be credited. Well, if you're thinking liability, you are correct because Kid Company owes services, owes $10,000 worth of services. So they have a liability to provide those services. Now we call this account unearned revenue. So we will debit cash for $10,000 and then we will credit unearned revenue for $10,000. Now, what kind of an account is unearned revenue? It's a liability. Don't anybody go for the fact of thinking it's a revenue because it's got revenue in the name. It is not a revenue account. I'm going to put a multiple choice question on this next test, and I'm going to ask you what kind of an account is unearned revenue. One of the options will be revenue, and there are some in this class who are going to choose revenue, and they're going to get it incorrect. But for those of you out there watching the video, what are you going to put? You're going to put liability, so you're going to get that correct. Okay, now, moving on here. We owe these goods. We owe these services, $10,000 worth of services. Well, as of December 31st, and I'm reading right here now, as of December 31st, the end of our accounting period, Kid Company has now earned $8,000 of the $10,000 unearned revenue. So we've been working on them. We've been providing the services. As of the end of our accounting period, we've earned $8,000 of the total $10,000 worth of services. All right, what adjusting entry would be made on December 31st, 2010? Think about this. Think about what we need to show. We've earned $8,000 worth of revenue. We need to show that we've earned $8,000 worth of revenue. And so you know we're going to credit a revenue account, right? To show the revenue. Think about what would we debit? What else has happened? Do we still owe $10,000 worth of services? No, we don't. because we've now earned $8,000 of that. So we're going to debit the liability unearned revenue for $8,000. And that's our adjusting entry right there. Debit the liability unearned revenue for $8,000. Credit the earned revenue account for $8,000. And that is what you will do 100% of the time with unearned revenue. You will always debit the liability and credit the revenue. You just have to determine how much revenue have we earned in the period. All right, that concludes our unearned revenue video. And again, if you have any questions, post them to the discussion board.